Dory, when you're looking at the response to President Trump coming out and saying, hey, it's going great out there, is the optimism valid?
Well, that's a good question. It sort of reminds me of Lucy pulling the football away from Charlie Brown and he falls on his back again. I think the market's been head faked by that optimist talk for the last 15 months. So I'll believe it when I see it. However, I do think China's dealing from a very weak position and Trump is dealing from a strong position. I think any expectations that we have an all-inclusive deal that takes care of everything is totally unrealistic. So I do understand they're focusing kind of on intellectual property right now. So hopefully something comes of that. But I think the real practical thing is they're not going to solve human rights issues in mainland or Hong Kong. They're not going to solve, some of these technology transfer issues that they're dealing with or industrial subsidies. I think it's going to be really difficult to deal with the currency issue and have good checks and balances on that. So if you're a company and you're waiting and you're not doing production because you're going to wait and see how this happens, I just think that's a mistake by CEOs, and they need to find other ways to deal with their supply chains.
What are you telling your clients, especially those you're looking at their retirement funds, what are you telling them about the volatility that we're experiencing right now?
Well, retirement savings is all about the long term. So, you need to invest for the long term and turn away and let it go. But as far as exposure to China and companies that are dealing with China, at least over the next 3 to 5 years, there's no reason to overweight, in my opinion.
We're going into the fourth quarter now. Often what we see is this gets wrapped up with a big holiday bow, but certainly that wasn't the case last year. What's your expectation for Q4?
Well, I think there's some downside bias towards news. So if we've got bad news that comes out, the market's going to overreact to the downside. However, I don't think things are as bad as people think. That people aren't you worried about a recession? I'm not worried about a recession. So what if we slow down to 1.5% growth? We had that in the previous administration for 8 years. What people are worried about and what they're afraid about is a crash. And I just don't see a crash in the cards right now. The banks have tremendous amount of capital, 8 to 10% capital. As far as the cushion against the 4% restrictions from regulators, it's 6 to 7 times the amount they had in 2007. Is there some reaching on credit and some credit structure issues, particularly in the big banks? Yes, but I think we'll even see some good bank earnings today and the rest of this week that probably surprise some people.
Certainly we saw them performing well yesterday. You think the bank underperformance is over?
I don't know that it's the public markets, it's hard to tell, but fundamentally the banks look really, really good. And everyone's worried about margin pressure. I'm not worried about a lot of margin pressure unless rates go down, 150 basis points. Mm-hmm. But short-term margin pressure, I'm not really worried about, except for a few banks that are overly biased on the asset-sensitive side, like Comerica. But most of the banks, the big banks, are exposed more to trading and some other things in their net income than they are net interest margin pressure.
Dory, thank you so much for joining us on this Friday. Have a great weekend.